at the Kenya Re headquarters here in Nairobi. Mr. Jadiah, good to have you on the show today.
Thank you very much.
All right, so let's start with the 2020 financial year, financial performance of Kenya Re. Talk to us about the company's performance last year.
The year was difficult, but at least we got increments in terms of gross written premiums of 6%, and the echo is really coming back to me.
Apologies, we want to try to fix it right there. We seem to be having a technical issue. Okay, great. All right, Mr. Mwarania, we are fixing that in a short while, but it's okay. We could still be getting your insights on Kenya Re's 2020 financial year performance. Just go ahead and enumerate it for us.
Okay, we got a 6% growth in the gross written premiums from 17.5 billion to 18.5 billion. The net earned premiums grew by 34% to 20 billion, 20.85 billion actually. We saw a 2% growth in the investment income to 3.79 billion. And the profits at the bottom, that is the net profit, also grew. We got about 3.9 billion in terms of gross written premiums. It's 5% less than last year. And the reasons why it was 5% less than last year is really, I would say, factors or reasons which are outside the operations of the corporation, because one was the fair value gain on investment of the properties of the corporation. That is a market phenomenon. We saw valuations coming in down. Then we changed the methodology of accounting for our unearned premium reserves, which is to comply with the regulations of IRA. And that change resulted into a lot of reserving for claims, into the future. That also had an impact on the profit. And finally, one of our associates, where we get a share of their profit, and a drop in their profit, which naturally caused a drop on our part also. But a 5% drop in such a difficult year, and with such external factors, we think we still try to achieve what we set out to achieve.
Great, quite tumultuous time, but you guys, managed to perform properly well. So let's still stay with matters of the battered economy, and there's been generally a tough year in 2020. What are some of your general observations of the economic outlook of the country on the same?
In terms of the entire economy, of course, we see GDP is going to be, the growth rate in GDP is going to be depressed. We are seeing estimates of 5 to 6% being given by the government. For the insurance industry, one obvious thing that we will see is a bit of upsurge in claims because of classes of business like medical, where we would expect both inpatient and outpatient to cause more cost. We also would expect a bit of increase in life claims, and we've seen quite a bit of it, maybe not as much as we anticipated in the past, but there's an increase there. We are also seeing depressed growth in the gross written premiums, because when the economy gets battered, you have certain classes of business like workmen compensation, which, of course, when people are laid off, get to attract less premiums. We also have other classes like travel, which have been negatively impacted. When people are laid off, also they also don't pay for premiums as they should, including those who have been having life policies. So one other effect is we are seeing a decrease in premiums. And when you have a combination of decreasing premiums and an upsurge in claims, we can expect the profits will also get a downward pressure. Productivity of staff is something else that we expect to probably go down. This idea that people have to work from home, which is necessary now because of COVID, may also come with a bit of reduction in overall productivity of staff. And maybe finally, another kind of outcome we'd expect out of this is that because of COVID and because of its various impact it has had, negative financial impact on the economy, you can expect the market is going to react with coming up with new products to address the challenges that have been posed by COVID.
Great. So we are making an observation that the reinsurance industry is really growing in the recent past, particularly here in the country. What are some of the opportunities that the reinsurance industry is looking at in Kenya for growth?
Microinsurance remains quite key because, as we know, the levels of income of the majority of the population is not as high as it could be. And therefore, microinsurance offers an opportunity even for the low-income part of the population to engage in insurance. And it is even more when you combine with the technology nowadays, where you can pay premiums in very small amounts through mobile phone, and even get your claims processed through mobile phones also. So we think microinsurance still remains a major focus area of opportunity or growth for both the insurance industry to push in the products that we do, and also for the insuring public to access the services of insurance without necessarily have to a lot of money to spend at one moment in time. There's also the issue of protectionism that we are seeing with a lot of markets where domestication is coming in. We've seen it in Uganda, we saw it in Tanzania earlier. It's not in Kenya. It's being talked about in countries like Zambia, Ethiopia, Ghana, Nigeria, places like Nepal, and even India. They are all domesticated. And among those countries also, there are those who have come up with national insurance companies which are entitled to compulsory cession. Now, the opportunity comes here for those countries when, say, for example, Uganda, the domesticated, the insurance business opportunity, even the insurance business opportunity for domestic insurance companies obviously get enhanced. And the opposite happens in terms of other insurers like ourselves who are outside. But still talking about opportunities is an opportunity one easily sees in the market. The other one I would mention is innovation, because innovation is really the way to go. COVID, like I've mentioned, is one area which has been uncovered, not covered by insurance before. Now it is being covered. And those who are able to innovate and come up with a product that responds to the challenges, whether it's the financial challenges or the coverage challenge or the life that goes with it, then of course there will be an opportunity there for them. I think there's also a lot of opportunities for training and awareness and education generally for insurance, looking at the low penetration rates that we traditionally have across Africa. In Kenya, we're talking about 2.4%. There's still a lot of scope for growth of the insurance, and therefore through training and creating awareness and empowering people to know the value of insurance, then there's an opportunity there for the insurance companies. Finally, I could mention partnerships. We are seeing a lot of international brokers, international insurance companies coming into Africa, coming even the Kenyan market. They have got their set of tools of how they do business and things like risk management and experience from the larger world, so to speak. So again, partnerships with these intermediaries and other players like brokers, like I said, like reinsurance companies, provide an opportunity for growth of the insurance companies.
Amazing. So we are seeing insurance companies being innovative and coming up with covers for COVID-19. What's your take on the same, and how can companies make the COVID-19 covers effective for the users, for the policyholders?
Just like any other cover, the policy must provide protections. Because it's a new innovation we are talking about, the product must be able to cover the requirements of the insuring public. If it is medical insurance expenses, inpatient and outpatient, it needs to be covered. If it is for business premises, it also needs to be covered. So the first step would be to come up with a product that gives a coverage without too much exclusions for the disease. The other situation is that the pricing has to be done and done right, so that of course the product is successful and sustainable in the long term. So we'd expect that actuarial reviews would be done to come up with the right price, a price that is affordable, that is manageable, that is the correct pricing for the risk, without undercutting, without underpricing or overpricing. And once that is done, then the product is really good to go, because the only remaining thing would be now to provide reinsurance protection for that product, where the insurance company which is coming up with it would have to partner with reinsurance companies to come up with the appropriate treaty, facultative, or otherwise other kind of reinsurance protection for the product.
Great. Let's talk about a particular product in the insurance world, and that is the life cover. How has COVID-19 affected life cover insurance, the uptake in the market right now?
There are two aspects of life insurance group, that is the individual life and the group life. Now, the biggest impact has been on the group life. The reason is because the layoffs, all the people who are employed and have been laid off, either permanently or for some time, means they can no longer continue paying for their premiums. And since they are not in the working environment, the group, that is the group life in which they are being insured, obviously shrinks or reduces. When it reduces, the premiums that is coming from that or coming into that group is reduced. And obviously also the persons who are in there, when they are not in the group, they are no longer covered. That's why we are seeing a bit of shrinkage in the group cover, in the group life insurance. There's also the aspect of coverage that if the coverage is given for COVID, for members in that life group, life scheme, then of course that could also result into higher claims for the scheme. On the life, the impact has probably been less, maybe because of the levels of penetration of insurance in Kenya, whereby majority of people may not be insured, unfortunately, for life, which means even when they get affected by COVID, then there is no insurance claim in it, although a life is probably lost. But all the same, we still do see that, of course, there are persons who are insured and who got affected by COVID, and that's why we are saying that the losses have come up slightly.
Great. So still staying with matters COVID and the effect on the economy, we understand there has been a lot of ramifications on people's income. Some have lost jobs. So what is the role of Kenya Re on ensuring that, underwriters and, of course, other insurance policy providers just adjust the premiums for the policyholders to cushion them against these tough times of COVID-19? Are there any price adjustments for the premiums, or we go with what we had initially?
There's been a lot of accommodation, I must say, and we saw a circular from the regulator actually asking for this accommodation. We also have seen messages from government saying that business must be humane or must wear a human face towards the public and the impact of the COVID. So the long and short of it is, yes, you have to go maybe give people sometimes some time, longer periods of time to pay premiums. Things like life insurance policies, if you don't pay premiums at certain agreed levels, normally they lapse. But we've seen that because of this accommodation and patience, those policies have not lapsed. And the issue about pricing, actually we should be talking about a price increase if you want the coverage, not a reduction. So I think the price will stay because if it was properly done, based on, for example, if you're talking about life, the quality of somebody's life, the age and all the other rating factors. But accommodation in terms of maybe staggering the payments, laying off the periods during which you pay the premium. Rebates can also be discussed, but I think really the idea should be to facilitate the policyholder to pay in a more accommodative way, not necessarily to reduce the price.
Great. So let's talk about something that is almost controversial, but not really controversial. It's the issue about vaccination. We have seen government is now coming out to say strongly to sort of coerce people to take the vaccine. Of course, this is pegged largely on economic recovery. The government wants to push the number of people who are vaccinated in the country to a larger number so that the economy can be reopened and things to happen, really. So as insurers, are you looking at a point whereby you're going to only offer insurance policies to those who have been vaccinated only, or what would be the criteria, really?
We think, first of all, it's a good initiative of government to try and get as many Kenyans as possible vaccinated, because it's the only real solution that we know of COVID at this point in time. And I think it's also a traditional responsibility of a government to make sure that its population is safe and catered for in every aspect. In this case, we're talking about COVID. But coming to insurance, we haven't had any sitting where we said that, for example, if you're not vaccinated, your insurance covers lapse or don't apply anymore. The message we would wish to pass to the insuring public is really, it's a good thing to insure yourself, to get yourself vaccinated, whether or not it's a condition of insurance. The contracts, most insurance contracts are annual. They are already signed, for example, for this year. I do not see underwriters going back and saying now we want to introduce this new condition of you must be vaccinated to continue. But we would encourage that as much as possible, let the population get vaccinated because it is for the good of themselves, for the good of the economy, and for the good of themselves as individuals and their families.
Great. As we bring this conversation to a close, Mr. Mwarania, we just want to take stock of what is 2021 looking like for Kenya Re as we bring this to a close. In like 30 seconds, sir.
Quite a tough year. We expect a bit of increase in claims, like we mentioned. We expect that the premiums, collecting premiums is going to be more challenging. A bit of pressure in terms of the growth in the premiums themselves, which will bring pressure at the bottom line in terms of profitability. The investing environment is equally challenging because we are not seeing a lot of new products coming to the market. We don't think the banks are going to be giving any high interest rates. So it's going to be fairly challenging, but by applying the right strategies, for example, rebalancing of investments, we should still be able to achieve our strategic objectives.
Many thanks for staying with. Many thanks for finding time for us on the interview, Mr. Jadiah Mwarania, of course, the CEO, MD of Kenya Reinsurance Corporation, commonly known as Kenya Re, and congratulations on clocking 50 years. That is 5 decades. Many thanks for staying with us on that conversation right there on the state of insurance in the country, and of course, everything else matters insurance. Let's go back to our stories of the day. So, traffic-related air pollution.